Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is February 7th, 2016. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. U.S. stock market is in correction. Leading stocks broke down and gold maybe bottom out. Last week, I have stopped out my long positions on Tuesday. And I have been stayed in cash for the past few days. Let's take a look at the charts and the indices. German DAX index downtrend. Last week it just came down. It rebounded a little bit previously and hit the 20-day moving average and just came down. NASDAQ monthly chart, we have to look at this carefully. As I shared with you previously, NASDAQ, whenever they broke the annual moving average, which is 12 months moving average, this green line, and during the uptrend, it is able to rebound from this annual moving average, and the peak is higher than previous one. However, on the year 2000, when they break the annual moving average, rebound, the peak did not reach previous high, came down again second time when they break the 12 months moving average. That's a starting of the bear market. Same with the year 2008. It did the same and broke 12 months moving average first time. Second time rebound, it didn't even reach the 12 months. It did not even go above 12 months moving average and just hit the resistance, come down again. This pullback had the characteristic of the previous peaks. It broke 12 months moving average last year. That's the last August, September timeframe. Rebound and came down again. This rebound peak did not reach previous peak. And it's not a good sign. So, however, last week, the week before last week, it rebounded. So it looks like it's going to go up. But it did not materialize. It just came down again. Let's take a look at the weekly chart. The 2 weeks ago, it reached the low of last August and rebounded. But this rebound is kind of weak and came down again. As you see the volume on the weekly chart, this down week, the volume is higher than the up week. That's the institution selling. Daily chart, you can see it rebounded, but hit the 20-day moving average and then just came back down. It was on this day, Tuesday, all my long position got stopped out because of the, it came down that day. Mid cap did the same, rebounded a little bit and came down. Small cap is in the bear market. Look at the small cap. It just the 12 months moving average became the resistance. So we have been 3 months in a row. We have been coming down. Small cap weekly chart. You can see it just broke the previous low. Now we're down here. Small cap daily chart. As you can see, this is a very pretty nasty breakdown here. And small cap indicate the risk. Basically, market does not want to take risk, so the small cap is acting weaker than the large cap. And that is also a characteristic of a bear market, not the bull market. In the bull market, small cap usually perform better than the large cap. Let's look at the SP 500 large cap monthly chart. As you can see, it shows the same characteristics as a NASDAQ index. Broke 12 months moving average, rebound, did not reach previous high and came down again. Same thing on the weekly chart, you can see clearly, and now we're down here. SP 500 daily chart. And came down, rebound, and this one a little bit better, hit the 30-day moving average and came down again. This is gold monthly chart. Gold is worth watching right now. As you can see, gold had been from year 2002 all the way to 2011. Gold was in a 10-year bull market and reached the peak and came down, and right now it has came down from 1923 dollars per ounce all the way to 1072. That's a recent low. And if you draw a big Fibonacci retracement line here, and the gold has retraced 50% of this run up between 2002 and 2011. It retraced 50% in the past almost like 5 years. It retraced 50% of the previous 10 years run up. So from the long-term trend, it has a potential gold may go back up again. And if you believe this is a mega uptrend, it's a very, very long term, gold is going up and it has retraced 50% according to Fibonacci theory, retracement theory, and it has a potential to rebound anywhere like this three level: 38% retracement, 50% retracement, or 61.8% retracement. Usually if it goes to 61.8%, that's gonna turn down. Usually it doesn't go that low before a rebound if you consider this is a mega bull market for the gold. We don't know that for sure. Right now, we have to wait and see. But I'm just saying that there is a potential. Gold weekly chart, as you can see, the gold weekly chart, this light blue is the 10-week moving average. The dark blue is a 40-week moving average. Gold has a rebound back up. If gold can go above 1191, which is previous high here, and when they pull back, if it does not break previous low, then we can see gold, the trend has reversed. Gold daily chart, as you can see, this run up is very quick. In a very short period of time, it ran up. We just have to wait until it break 1191. It break above 1191, then we see gold has according to the wave theory, if something is turning from downtrend to the uptrend, it has to break previous high, and when it pull back, it has to be higher than previous low. Let's say here it's going the downtrend. Every reaction up and down, it's making lower high. This is lower high and the lower lows. That's a downtrend. If this thing is gonna go uptrend, so it's gonna go like this, the wave. So every wave, the peak should be higher than previous peak, and the bottom should be higher than previous bottom. That's what I'm trying to say here. So let's wait and see what gold is gonna do. This become very interesting thing to watch. For a long time, for like 5 years, gold was in the bull market, but now it looks like it may have a potential to go back up. So we just wait. Silver does the same thing. Silver break out from this trading range and is going up. And gold mining ETF, gold mining stock ETF is just very strong right now. You look at this volume, it's like the beating up. There are a lot of buyers beat up this thing. US dollar going down. Crude oil continue go down even though it has tried to rebound here, but overall trend is still down. Energy ETF, energy sector ETF downtrend. Shanghai Exchange Index monthly chart, it's downtrend. It's in a long-term downtrend here. China market is closing right now. It's going. Today is actually the Chinese New Year's Eve. Anyhow, Happy New Year. Anyhow, the China market is gonna close for 5 days, so we don't have any trading right now. But the trend is down, and weekly, the daily chart trend is down. FXI, this is the ADR and ETF of the ADRs, and trend is down. US Biotech, IBB, this is downtrend. See, when something is going up, it's making higher highs and lower low, you can draw a trend line here. But as soon as the trend line is breaking, that's the turning point. The trend is going down now. IYR is the US real estate and downtrend. See, this was a trading range right here. You can draw a trend line here, but now it's going down. And Jets is the same. This is a airline ETF, airline stock ETF, downtrend. Copper price, seems trying to rebound from here, try to turn here. So we gotta watch for the commodity price. And MBB is this is mortgage bond price. It's going up. Semiconductor ETF going down. As you can see, here's a trend line and it broke down here. Now it just rebound, but it looks like it may just hit resistance right here. Social media ETF, those are the Facebooks, LinkedIn's, and all that. So obviously we know LinkedIn on Friday after earning release, I had a big gap down. So this whole index is being pulling down by those stocks. TAN is a solar ETF, solar sector ETF, downtrend as well. SLF is a financial sector ETF, downtrend. So a lot of sectors are going down right now. And last week I shared with you 6 stocks. Those are the leading stocks. But this week it didn't do very well. Now it's going down, so I sold. I actually bought Facebook. I also bought Google, but I just sold all of them because they hit resistance. They hit the stop order. Look at the Facebook. Facebook after the earning had a very big gap up, and also this happened to be a base breakout from the base. Gap up price is very high, so I bought here, and then as the stock keep going up, I move up my stop order. So on Tuesday, as soon as Facebook turned down, and I got stopped out around I think it's around the 113 area. I bought it on here, so it has a little bit of gain. It's not as much as I was hoping for. I was hoping for like a 20% gain, but it didn't get there and then came down. And you just cannot force it. I mean, this stock is gonna do whatever stock wants to do. Looks like this stock wants to go down, so I cannot make it go up. Therefore, I just have to get out of its way. Friday sell-off, it's pretty bad. The volume is really high. I wouldn't touch this stock for a while. I just watch it on the sideline. Google did the same thing. Google had a big gap up on the earning. On the after release earning, it went back up. If I remember correctly, that day when they opened, it was like a 5% gap up. I actually bought it right a little bit after the open. I bought it, and I used the hourly or 5-minute chart to set a stop. And the very same day, I got stopped out for a small loss. So that just tells me how important the stop order is. After I get stopped out, second day, it just keep going down. Third, fourth day, keep going down. So it's very important to have a stop order to protect you from a big drop like that. Intuitive Surgical right now is hanging here around 50-day moving average. RAI, this is a stock pretty good. It's still above 50-day moving average. This one looks the best, looks better than other stocks. But that doesn't mean I like to buy this. So tobacco sector usually do well during a market downtrend. And So that tells. Anyhow, Ross store, those are the clothing store, and this looks okay, but again, when market is going down, just don't buy anything. Starbucks broke 50-day moving average with pretty high volume, then broke 200-day moving average with really high volume. So that's a bad sign. Just something, to watch out. You shouldn't buy this stock. Anyhow, looks like every single stocks on the leading stock list 1 week ago are not doing so great, except this RAI. Every other stocks are not doing so great. So, what to do in this market? And very important thing is to have a stop order in place. If you're long the market, you have to have a stop order. The stop order will automatically take you out of the stock or ETF if your long position fall below certain level. There are many ways to choose the stop price, and you can choose a major support level such as 50-day moving average or other moving average like a 20, 30-day moving average. Those are all fine. Or you can look at the chart, find the previous support or resistance. If the stock break down those previous support or resistance, that's the sign that the tide has changed, and the trend has turned, basically. Or you can use Fibonacci retracement. This is pretty good for the gap up or some kind of uptrend. If a pull, usually when the move go up, and then it will pull back a little bit, but it shouldn't pull back more than 50% of previous uptrend. So that's a theory of Fibonacci retracement. So you can draw the line and use the retracement to be your stop order. And I usually use the stop market order to sell. I don't use stop limit order. And if you don't know what the differences are, please just find out and Google it and do some homework on your own. So the theory for me is when something is going down, it's very important for me to get out. It is not important for me to try to bargain for a very small price difference. So I don't use stop limit because it's a priority is for me to get out. For whatever price, I just have to get out. I don't care about if I sell for 50 cents less or $1 or $2 less when the stock price is above $100. I don't care about that a few dollars difference. I just want to get out of the position, because when something is going down, and especially if you have a good stop order price, your price is set reasonably well. When that hit the price and came down, more often than not, and the stock will continue to go down. And so I find that's very important. Just get out. And that's all for this week. See you next week.